What's up, guys? Welcome to the Crypto Savvy channel. I'm Craig, and happy Friday. I hope everyone has a fabulous weekend. Sorry I didn't make a lot of videos this week, but it is Friday. I did want to get a quick one out just to show you guys what I think's going on. Is Bitcoin on its bull run and going to new all-time highs? I don't think so. I'm going to show you why. Definitely check this out. I'll also show you a level I'm looking at. Take a breath. I may actually take a long, but let's get into it. Let's look at the charts and see what's going on. First, taking a look at NASDAQ. Right here is where I'm looking for resistance if it's able to get up this high, about 15.4. And that is the 0.786 from this high to this low. Gets us right there. As you guys know, I still think we have further down to go. Although these markets could pump a little more, we'll take a look at the DXY and also the 10-year yield. But before we go any further, make sure you guys take 1 second out, smash that thumbs up, and make sure you leave a comment. Let me know what you think. Also, I asked a while back, right, about how everybody feels about the economy, as in normal people with normal jobs. Is it still hard? Are you still struggling? Let me know down in the bottom below. Is it harder to pay your bills than it was 3 years ago? And then you can read through them comments and put in your info. So anyways, looking at where we're at, like I said, same thing here. We did get back into this rising channel, but right here, the 7.6 is on this S&P is 45.37. That's what we're looking for. As you guys know, I think all markets topped out back here, right? Bitcoin, everything. I don't think we're going to see new all-time highs, in my opinion. Again, I will show you a point where I may get a little bit bullish, and then I'll show you what I'll watch for to get back in the bearish side if I hit the bullish side, right? So as of right now, we are still getting rejected here at the golden pocket so far for the Dow Jones, but the 0.786 is about 35.2. Taking a look at oil, you guys know this oil chart's about 2 years old. I'm waiting for a break of this again. Then I would look for a retest at 62. If that fails, you guys know my targets have been for 2 years, 26 to 35 bucks for oil. If you guys remember back here in the 2008 collapse, what oil did, I think it'll do same type thing here. DXY. So DXY, this is what we've been watching for, this 105. Told you we could come back and retest this. Now, if this breaks, DXY's next support is at 104, and then the 0.5 fib at 101. We'll see how this reacts at 105. If we do get a bounce there, then I think everything will start dropping from there. But if it does blow through there, we may get our one more push up. Looking at the 10-year yield, as you guys know, I'm looking for 7 to 8.3% in the 10-year yield, and these are measured moves. This one, if you look at the solid lines, there's just a broadening wedge there. We broke out up here. That gives us that target of 7. And then, of course, we're looking at this as a possible inverse head and shoulders. That would get us to the 8.2, 8.3 range. If you zoom out here, let me get this out of the way, you can see this is just a pullback. We've had plenty of pullbacks before major run ups, right? So let's take a look. I just drew a trend line here off of these wicks on the bottom. Let's take a look at, if this was to break, then I would say 4.3, let's say, on the 10-year yield. If that was to break, then, you know, maybe things are switching around, but we have attempted to break this 1, 2, 3 times. Remember, every time you hit a resistance area, it gets less and less likely to hold, right? So I think the next time we come up and test this, we'll break. DXY, same thing, guys. We got rejected right where we thought we may. Remember, I said if we open and close a daily above this, then it would continue up from there, but we were not able to. Now let's watch the 105 area. So same technique on the 105 area for the bearish side for DXY. If we open and close a daily below it, then I would look for this 200 EMA around 104. If that breaks, then we could come all the way back down and test this yellow dotted trend line. Either way, guys, I like to talk about structure in market. The structure has not changed for Bitcoin. Yes, the prices are different. And that's why I don't like to give invalidation points, because I go by structure. And I'm going to show you the structure of Bitcoin that is making me continue to be bearish and think we are going to see new lower lows for Bitcoin. Let me get into that. Before we do, a word from my sponsor, Prime XBT. Definitely check them out if you haven't already. Links down below in the description. I will be releasing a new tutorial next week on Prime, so check them out.
Begin your path to financial freedom. Gain up to a $7,000 bonus on us. Register and use promo code. Deposit and enjoy a 7% bonus. Available now. Link in the description.
All right, guys, so you can also use my promo code, not only Savvy50 to get you up to a $7,000 bonus, but Savvy25 to get you 25% off your fees. Again, check them out if you haven't. By far my favorite exchange. And if you're doing anything on the internet, I also have a link down below for Pure VPN with a huge discount if you use my link. Definitely use a VPN. You don't have to use Pure. You can use whichever one you want, but make sure you're using a VPN just to hide your IP address so hackers can't get to you. Okay, so Prime XBT, if you go up to the trade zone, you have the global market trades, and then you have the crypto futures trades. Let's open up the global markets, and you can see you can trade Apple, Forex, crypto, gold, silver, oil, S&P, Dow Jones, everything all from one exchange. Definitely check them out if you are into trading, especially more than one asset or class, because you can do it all from one exchange. All right, let's look at this. So this is the reason I believe we have done a wick-off distribution. It's possibly over, but there is a possibility we could get up to this 37,000 range or 36.9, and I'll show you why in the next chart. We've been looking at this for a long time. Same type thing that happened at 64, 65,000 when we had the big crash down. This is what I'm watching for. So if you wanted to play it safe, you would wait for a break of the upthrust over here at 31.8 area. If we break that, it's probably going to come down pretty quick and pretty hard. Now, if we get up above this, I'm going to show you in the next chart why I would be bullish. But as you can see, the schematic is still playing out. And usually right before big dumps happen, everyone is so confident that the markets are going to continue up. That's why I want you to be cautious, because the confidence is extremely high. The same as it was at 64,000, the same as it was at 69,000. Again, I just want to heed caution. Be careful, guys. Don't be playing with more money than you're willing to lose in this market, because I do believe the biggest money grab in history is coming. That's right, the biggest money grab in history, meaning I think the markets are all going to collapse hard. What day? I don't know. I don't think it's going to be much longer. Give it a couple months maybe, but either way, the structure hasn't changed, and I'll show you that in a minute. But if you look at this rising channel right here for Bitcoin, right? This is on the 4-hour chart. You could also throw it on the daily, see the same thing, right? So you can see also here, lower high in the RSI, higher high in the price action, hidden bearish divergence, looking like a reversal is possible, but watch for that one more big spike up. This will probably end up in a wick if it gets rejected hard here. So be careful, because that is a possibility. But once that breaks, then where would your target be? Back down to this high volume node around 16.7. Of course, like I said, I don't necessarily believe that that's going to hold, right? Obviously, you'll probably get a bounce because it was a low, but I do think we're going to see new lows before this is all over with. And I think that's going to be an opportunity of a lifetime. Make up your own mind. Of course, none of this is financial advice. Watch other people. Develop your own methods, right? So this is what I'm looking for. I'm still looking for us to possibly get up to this range, possibly, right? Here's another reason I've been showing you guys this. These are unfilled gaps in the CME. We have one at 3,500, 7,600, 9,700, 11,200, 20,300, and we closed our gap above us at 35.3. And again, we are currently sitting below that gap. We'll see how that goes. And here's another thing I wanted to show you guys, right? So looking at this as a possible A, B, C, D, E, as we talked about, D could still rise a little bit more. But let's take a look at where we're at here. Look at this red rising wedge, right? We got rejected right at the top of it for the third time. Now, if we were to break down from here, we'd take a measured move. So this would be a good area to get a short if we break it. So this bottom trend line, depending on if, when, and where we hit it, would be somewhere around 26.4, depending on, of course, how long it takes, because it's a ascending wedge, right? Now, if we were to break up, what would that be? That would be as high as 50,000, right? So if we break up above this and get support, that may be a good place to put in a long up to 40 to 50,000. Let's go back over here to this 4-hour chart and take a measured move of this one, right? If it was to break to the upside and hold 47.7, somewhere in that range. Now that's the bullish case. Everybody wants to hear the bullish case. There it is. But before that happens, I have to see this 37 break and hold as support, right? All right. But yeah, so if this breaks down again, where would that get us? Approximately 12.9, somewhere in that range. But again, I think if we break to new lows, which I still believe we are headed to, is going to be around 97. Could be as low as 37 if it got really bad, right? Bubble pop. These are reasons that I've been showing you guys. This is a pattern that happens when there's overhyped markets and crazy stuff happen. You can see over here in Sony, this from this low here where I have the arrow to this high was 162% rally. If you don't think those people were extremely bullish, and these are all weekly charts, I'm sure everybody was super crazy bullish here, thinking it was going back up because they were still, all these people lost money here. But as soon as it goes up a little, everybody gets confident again that it's going back. And that's what causes people to lose money, right? While this was going up, they should have been taking profits. Now, that's hindsight, of course. Same thing I think is going to be happening here. People are going to be wishing they were taking profits if they bought the bottom here, right? All right, let's take a look at this one. This was a 66% rally. Again, we're at like 130, somewhere in that range on Bitcoin. But same market structure, guys. You always get this big, huge rally. We got a big, huge rally. I think this thing's going to die out soon. Same thing here. Amazon, 131% from this low to this high before correcting all the way back down to new lower lows. I think the same thing's going to be happening, guys. So just be careful, be cautious. Don't get crazy and trade on high leverage, right? If you're going to use leverage, I suggest either laddering in your trades as it goes in the direction you are perceiving, or just very low leverage. So anyways, check out Prime XBT, links down below. I will see you guys in the next video. I hope you have a great weekend, and I'll catch you in the next one. Take it easy. I'm out.